Welcome back to the Dinar Daily, your trusted source for real-time updates, insights, and breaking news from the world of Iraqi dinar investments. Today's story is shaking the entire currency community. Iraqi dinar investors react to sudden CBI rate freeze. What happens when the Central Bank of Iraq suddenly freezes its exchange rate and leaves thousands of investors questioning their next move? That's exactly what happened yesterday, and the reactions have been nothing short of explosive. If you've been following the dinar world for any length of time, you already know this announcement has turned hope into uncertainty overnight. When news broke that the Central Bank of Iraq, or CBI, had decided to freeze the official exchange rate, the reaction across investor forums and social media was immediate. For years, investors have been waiting for signs of a long-anticipated revaluation, the so-called RV. Instead, what they got was a complete halt. The CBI's statement confirmed that the current rate of roughly 1,320 dinars per US dollar will remain unchanged until further notice. And while the words seemed simple, their impact was seismic. According to the CBI, the freeze is not a random move. It's part of what they're calling a comprehensive economic stabilization plan. The official reasoning is to strengthen market confidence and prevent speculation during a critical financial period. But many investors aren't buying that explanation. They see this as a stall, a way to delay the revaluation conversation even longer. Still, some experts suggest the freeze might actually be a necessary step before any major shift can take place. Now let's talk about how investors themselves are responding. The first group we're seeing online is what many are calling the panic sellers. These are people who took one look at the news and immediately started unloading their holdings. Sarah from Michigan, a longtime dinar investor, said she sold all 2 million of her dinars just hours after hearing about the freeze. Her reasoning was simple. If the CBI says no changes are coming soon, why wait around? And she's not alone. Roughly 30% of reactions we've seen across major platforms reflect that same sense of frustration and urgency to exit. Then, there's the second group, the wait-and-see investors. These folks are taking a more cautious stance. Mike from Texas, who's been invested since 2018, said in his blog that he's not panicking. His theory? Central banks often freeze rates right before implementing major policy shifts. He's seen this pattern in other countries before. About 40% of investors appear to share his mindset. Worried, yes, but still hopeful that something bigger may be developing behind the scenes. But perhaps the most surprising group is what we can call the renewed optimists. Instead of panicking, these investors believe the CBI's decision could be the calm before the storm, a necessary pause to prepare for a long-term currency reform. Jennifer from Florida, who leads a foreign currency investment group, said in her recent live stream that Iraq might finally be focusing on solidifying its economy before making any bold currency moves. In her view, stability comes before strength. Interestingly, these investors are not selling. They're buying more dinars. And of course, we can't forget the final slice of the investor base, the conspiracy theorists. This 5% believe there's more going on behind closed doors. Some claim this freeze might be coordinated with international financial institutions, maybe even the IMF or BIS. While those theories often drift into speculation, a few of the arguments do touch on real economic dynamics, especially Iraq's growing ties to global monetary systems. Financial experts are also weighing in on the news. Dr. Ahmed Hassan, an economics professor specializing in Middle Eastern markets, noted that rate freezes usually signal a country's effort to control external pressure. For Iraq, he points out that volatile oil prices and regional conflicts make stability a top priority. His forecast? The freeze could last anywhere from 6 months to 2 years, long enough to cool speculation but not necessarily a permanent move. Meanwhile, Maria Rodriguez from the International Currency Institute offers a slightly more optimistic angle. She believes this decision might have been pushed by the IMF, encouraging Iraq to focus on long-term appreciation instead of a sudden revaluation. In her research, similar freezes in other countries often led to gradual strengthening over time, rather than an overnight RV. It's a slower path, but potentially a more sustainable one. So what does this actually mean for the average investor holding dinars right now? Well, that depends entirely on your strategy and expectations. If you were banking on a fast revaluation this year, this freeze probably feels like a gut punch. But if you're playing the long game, this could simply be part of the process, a step toward creating a more predictable and credible Iraqi economy before any rate change occurs. Looking back at history, This isn't the first time a currency freeze has happened. When Kuwait implemented a similar freeze during the 2008 global financial crisis, it lasted about 14 months, and once lifted, the currency gradually strengthened over several years. Turkey did something similar in 2019, maintaining its freeze for about 2 years before seeing moderate appreciation. So while it may feel like a setback, history suggests it's not necessarily the end of the road. For new investors thinking about entering the dinar market, though, this development changes the game entirely. The chance of short-term profits just got slimmer. Now, this is a long-term investment, possibly years before any noticeable return. But for those with patience and perspective, Iraq's improving infrastructure and growing oil revenues might still make this an intriguing opportunity over time. In terms of the broader economy, a stable currency isn't all bad. It helps Iraq attract foreign investment by reducing uncertainty for businesses. When companies know what exchange rate to expect, they can plan with confidence. However, the flip side is that a fixed rate can make exports less competitive, especially if neighboring currencies fluctuate. Iraq's oil-driven economy could feel that impact if global oil prices dip while its currency stays fixed. Emotionally, though, this freeze has taken a heavy toll on investors. Many people bought dinars not just for profit, but as a symbol of hope, a chance for a better financial future. The sudden halt feels like a dream deferred. Social media is full of frustrated posts, late-night debates, and people trying to process whether to hold on or move on. It's a reminder that every investment carries emotional weight, not just financial risk. The smartest investors right now are those who never put in more than they could afford to lose. They're disappointed, sure, but not devastated. This situation underscores a timeless lesson. Diversify your investments. Never place all your hopes on one speculative play, no matter how promising it sounds. Looking forward, there are several factors that could influence when, or if, the CBI decides to lift this freeze. Oil prices are number one. If Iraq's oil revenues rise and stabilize, the government may feel more comfortable adjusting the currency. Political stability is another key issue. Iraq has made progress, but internal divisions and governance challenges still pose major risks. Regional tensions also play a big role. The Middle East remains a volatile environment, and any conflict or diplomatic shift could delay economic reforms. And of course, Iraq's relationships with the US, Europe, and international financial bodies will weigh heavily on future monetary decisions. A coordinated approach could mean gradual appreciation rather than sudden revaluation. So what should investors do right now? Start by assessing your own situation. Can you afford to keep your money tied up in dinars for years if needed? If not, it might be time to reevaluate. Think back to why you invested in the first place. Has that long-term outlook changed, or are you just reacting emotionally to short-term news? Also consider the opportunity cost. What else could your capital be doing if it weren't tied to dinars? Could you invest in something more liquid, more stable, or more immediately rewarding? Every investor has to weigh these questions personally, and the right answer depends on your financial goals, not the latest headline. For those staying in the game, patience is going to be your greatest asset. The days of expecting overnight revaluations are likely over, at least for now. But history shows that economic reform takes time, and Iraq is still moving toward modernization and financial restructuring, even if it's slower than expected. If you found today's analysis helpful, make sure to hit that like button and drop your thoughts below. Are you holding your dinars through the freeze, or are you planning to cash out? Let's get the conversation going. We read every comment and feature your opinions in future updates. And don't forget to subscribe to the Dinar Daily so you never miss the latest updates on the IQD, global currency trends, and investment insights. Remember, successful investing takes patience, strategy, and the courage to adapt when the unexpected happens. Oh, and before you go, here's a quick tip. Visit dinaropinions.com. Just search it on Google. It's one of the best places to track real-time dinar news, expert takes, and guru updates all in one place. Stay informed, stay sharp, and we'll see you next time, right here on the Dinar Daily.